Hi, my name is Anu Buzruk. I work as a Senior Academic Assistant at Learning Commons Department of College of DuPage. I mainly tutor accounting courses. So in my last two videos, we had started with the accounting cycle. We covered the journal entries, T accounts, and the trial balance. Let's move on and have a look at the adjusting journal entries. So since we have covered the first three cycles, I'm not going to spend a whole lot of time. I had brought in cash, so it was a debit, as capital in the business. So I had brought in $1,000. Then I purchased some inventory. I'm going to go for a few short forms here so that we can move on quickly. And I purchased it on credit, so it's my accounts payable that got credited. Then I sold the inventory again on credit. I sold it for $1,500, so it was my sales revenue. Now, since I sold the inventory, I need to show it as cost of goods sold, $900 worth. So I do not have the inventory anymore in my stock. Now, apart from that, what I did is I paid some insurance ahead of time. 2 months insurance I paid, $100. I paid it in cash. Now, this is where is the adjusting entry step of accounting cycle. Now I need to close my accounts because the month is over. Now what do? This insurance that I paid ahead of time for 2 months, out of that 1 month got expired since I'm at the end of the month. Now as per the accrual basis of accounting, you have to write an adjusting journal entry so that your accounts are on accrual basis and not on cash basis. In the sense, I paid $50 ahead of time and $50 got expired out of these $100 cash that I spent. So what do? My adjusting journal entry is I need to expense out $50 of insurance. So I need to show it as my expense because I used it up, accrual basis of accounting. And so accordingly, my asset, prepaid insurance, will come down by $50 because I have already used $50 worth of it. So I cannot show the entire $100 as my asset. My asset will be 100 minus 50, that is only $50 because I expensed out insurance $50. That is what is adjusting journal entry. Now what happens after that in the accounting cycle is we go for a trial balance. Again, my short form so that we are not running out of time. Debits and credits, we have already learned about it in the last video. What all did I do? I had cash, $1,000 worth. Then I had accounts receivable, $1,500 worth. Then I had inventory, but I used it up, so it's no more with me. I do not have any balance of inventory, and prepaid insurance is my current asset. I paid $50 ahead of time for the next month, right? Then similarly, I had accounts payable. I owe them $900 because I bought the inventory on credit, correct? Then after that, my capital account is $1,000. I brought in $1,000 into the business. Then I made a revenue by selling my inventory. That sales revenue was $1,500. And then my cost of goods sold, whatever I sold, I need to expense it out. So it is my debit of $900. And lastly, my insurance expense was $50 because 1 month got expired. So when I close the trial balance, I'm going to make a total of both the sides. Let's not spend time on making the total. Please go ahead and do it on your calculator. And it will be $3,400 on both the sides. So that means my accounting is right, at least to a certain extent. In the sense, always remember that there can be compensating mistakes even though the trial balance is matching. So let's move on. What are our financial statements? What do we use do we make of this trial balance? Because what is our whole purpose behind this accounting is for us to know at any point of time as to what is the picture, whom I owe something and who owes something for me, and what is that amount, that something. Apart from that, for the outsiders, we need to let them know as to what is my capacity of earning, how much money I have put into the business, what are my sources of business, how much I have put up from my own pocket, and how much I have taken from outsiders or lenders. So for that, we prepare the financial statement. So my first financial statement will be my income statement, where I will be compiling my revenues and my expenses. So what is my revenue here? Sales revenue. So how much did I sell is 1,500. These are my amounts. Now while selling that, what happened is I had already incurred cost of goods sold. What was that cost of goods sold? It was $900. Now apart from that, I spent some money on insurance. So that is again my revenue expenditure and not my capital expenditure. So it is a part of income statement and not the balance sheet. So in this way, I have spent $950. And I'm going to subtract it from my revenue, and what it will give me is, of course, net income. So this is my income, which the shareholders or the lenders will be able to see that, okay, during the month I earned this much money. Now then I will be showing them the balance sheet. What is balance sheet? It shows the assets and the liabilities and the equity. So what all assets do I have in this business? I have cash. How much cash is remaining? I brought in $1,000, but then I paid $100 cash towards prepaid insurance. So in short, the cash that I have with me now is only $900. Okay. After that, I have my accounts receivables, who are 1,500 worth. They owe me this much money. Then prepaid insurance, I paid ahead of time. So it is my current asset. I paid $50 ahead of time. The remaining $50 got expensed out because the month has expired. So in this way, my assets are worth $2,450. Now let's see whether they match with the liabilities and the equity, which will be the last part of my balance sheet. What liabilities do I have? I have accounts payable, 900 worth. Then I have capital. I brought in capital, $1,000 worth, plus I made some net income. This net income, which was my revenue, it got added up in what I brought in. So in this way, as far as the owner of the business is concerned, me, myself, or the business owes that money back to the owner. And that's why it is a part of liabilities and equity. And then at the end, I will be showing, yeah, that's it. So these are my liabilities and equity. When I make a total of it, it is going to be again 2,450. So this way, through the accounting cycle, we are being able to show the financial picture of our company to the outsiders, plus the management of the company will have an idea as to where the company stands as far as revenue items are concerned and capital items are concerned. So in this way, I walked you through the entire accounting cycle through these 3 videos. I hope the basics of financial accounting, the 6 steps of accounting cycle, are little more clear to you and the video was helpful.